Welcome, everyone, to the Inside SMAs Podcast, where we turn complex data into crystal clear insights. I am Ryan Nauman, the market strategist here at Zephyr, and your guide through the fascinating world of separately managed accounts. Now, each month, we dive into the strategies behind the numbers and chat with award-winning SMA managers to give you actionable intelligence backed by 4 decades of PSN performance data. So whether you're an asset manager, advisor, or institutional investor, consider this your VIP access to the SMA universe. Today, we're going to shine the spotlight on Martin Investments. During this conversation, we're going to dig deep into the firm, their people, and their international investing strategy. But first, Inside SMAs is brought to you by Zephyr's PSN. For decades, PSN has been a top resource for investment professionals looking for managed account research and data. Asset and wealth managers rely on Zephyr's PSN to effectively reach institutional and retail investors. All right, enough from me. Let's bring on the star of the show. I'd like to give a very warm welcome to Sandra Martin. Sandra is the managing director at Martin Investment Management. Sandra, thank you so much for coming on the show. Really, it's a complete honor to have you on. Can you please tell us a little bit more about yourself and Martin Investment Management?
Surely. Well, I actually began my career in education with a bachelor's
Okay.
in French and child psychology, and worked actually at Latin School of Chicago and University of Illinois and New Trier High School. And then about 6 years after that journey, I decided to get an MBA. And
Okay.
so I received my MBA in 1977. Um, at that time, portfolio management was a huge part of being in finance and business school. So I felt like I really gained a lot in my graduate program. I joined the firm in 1992. Martin
Okay.
Investment was already created in 1989 by Patrick Martin, my husband. And he began the firm basically with about 20 clients, uh, individual clients, and also some charitable trusts. And his mission was to create portfolios for them that were done on the best of class historical performance. And he looked at all these different famous people, Warren Buffett and Shelby Davis and Benjamin Graham. He also
Yeah.
looked at his great aunt, Mary Hogan. She was a
Okay.
renowned investor back in the early 20th century, and for her the person she worked for, Mr. Boniface, was actually a lumber baron. He was actually written in several books. So
Okay.
it's kind of a historical story that this goes on, but he created this firm on that premise. So we started out small and we were going to be scalable. That was our mission early on in the 90s. And so we really tried to do everything that we could to get the best software systems in place. We also worked very hard to get global investment performance standard
Okay.
compliant
Yeah.
with that. And so that compliance, we claim compliance with that. We also worked on our trading system and our whole strategies. As we grew it with more individuals in the firm, another managing director. We also wanted to expand our strategies. When the firm initially started out, it only had a U.S. domestic strategy, and we eventually expanded that to 4 other strategies.
Okay.
So in 2008, we had the international strategy as well as a sustainable global strategy. In 2016, one of our clients actually asked us to merge both the international and the domestic strategies together.
Okay.
And then lastly, in honor of Mary Hogan, this renowned um, 20th century investor, we actually started a women's strategy. We are a
Okay.
women majority firm. So that was sort of one, in her honor, we also have that. And all the last 3 are global strategies. So we have a US, international, and 3 global strategies. Um,
Sandra, that's fantastic. I love that story. That is
well,
great.
it's exciting, having known the person, it just kind of brings to life some of the interest in it.
Yeah, and
And then, yeah.
yeah. No, go ahead.
Oh, so then again, we grew our assets to about over 900 million now, and we also
Mhm.
have increased our clients. So no longer do we just have individual clients and trusts. We have intergenerational clients, we have non-US clients, we have institutional clients, public pensions, we have foundations, and then also we have platforms associated with model portfolios and other
Okay.
RIAs. So we
Yeah.
really expanded the breadth and depth of who we reach as clients.
Yeah.
And so I think, that's all made the firm more well balanced. We don't have any one client necessarily
Yeah.
that's we're dependent on. And so we have a lot of resources. But we are very excited that everything is moving along. We're actually adopting a new software system for the front, middle, and back office. So we're always looking forward, and we will
Mhm.
be on the cloud instead of on premise. And so we're really looking forward to the completion of that by the end of this year.
Yeah. Fantastic. I love how you guys started small, but now and you're understanding the importance of technology. And we're
Yes,
going to talk about that being able to scale and scalability to bring
right,
on more clients. You've grown to now,
right,
individuals and trust to now institutions. So we'll talk more about that shortly. But I'm
sure.
sure technology plays a big role in that, and that's our investment in technology, which is great. Let's talk about the people for a little bit and the firm personnel at
Yes,
Martin Investment.
right. We are a very, very small firm. We have 12 individuals at the firm. With that, though, we have 6 advanced degrees, including 3
Okay.
MBAs. We have two individuals that hold their designation for the CFA designation. We have two additional ones that are doing the CFA program. We also have 2 CPAs, and we also have outsourced compliance officer. In
Okay.
addition, in 2000, I started an internship program. I think this comes from my former teaching, the interest in that. But it's been very, very vigorous and very alive, and we have a lot of interest in it. So every year we have somewhere between 3 to 6 interns. And so it's something that we really utilize, and we find that their interest and their guidance is, it's kind of a two-way street. We give them a lot, and they really are
Yeah.
great as far as their research skills. So they're an additional source of research for our firm.
Yeah,
So
fantastic. That's great. And we talked about the personnel within PSN, the PSN database. It shows you have 4 portfolio managers and 4 research associates that make up your firm, and that goes into the folks that have designations. Do they cover all strategies?
yes,
Or okay,
yeah, we will start out with, first of all, our portfolios are very concentrated. So we only have about 25 to 30 names in the portfolio. And a lot of times, their competition or could be competition to the US versus the non-US. And they're also in the developed market. So, there's a lot more research on those companies that are trading in the developed markets.
hmm
And they tend to be mid to large capitalization companies. So because of that, there's a wide amount of information. We have about 4 international sources of a bottom-up database of fundamentals on these companies. We have about an additional 3 to 4 macro regional information about this, about our portfolios. So it's sort of like you're too small for anyone to be specifically in international and one not to be in the US. And we find it a very dynamic way of doing things. So we're all involved on kind of all levels. Obviously, there's some individuals that will research certain companies more than others, but yeah.
Yeah, fantastic. So let's say everyone that watches this episode, they're like, this is a great strategy. We want to invest in it, include it in their clients' investment portfolios. Do you believe you have enough staff to handle a big influx of assets based on your current personnel?
Well, that's interesting. Yes, we do, for 2 reasons. One, we have really acquired a lot of clients over the years with not with the with similar or less staff. So that and it wouldn't be that you couldn't expand staff if you needed to. But what
Okay.
we really look at when you're going to be scalable, you want to be scalable in 2 different ways primarily. You want to be scalable in your strategies, and so we primarily invest in mid to large capitalization equities.
Okay.
So therefore, they can take a lot of investors. And it's not like somebody's cut out after a small fund or or a small company that is barely making it. You can't have too many investors in that. So we're scalable on a strategy level. We're also scalable on an operational level. I mean, we have invested a lot in this business to make it institutional quality, quality. Like I would say that our trading system, we do trade our own stocks, both in the foreign markets as well as domestic, and just the sophistication of that, as well as particularly this new system we're going to. Our accounting system, Abbott Access, works, but we really wanted to get something more dynamic that worked on an integrated level between all parts of the company. And so I definitely think we're very scalable. Just with the ease of this new system of onboarding to reconciliation to the trading, everything that's going to be going on will be in one big system. And I think it's just much more efficient and intuitive, which is good.
Yeah, technology. We
Well, it can
we know
be.
all about technology,
We know.
Sandra.
Yeah, well, there are little blips here and there, but yes.
Yes, but you need it, right? Especially when you're trying to scale, and it can offer a lot of efficiencies, just
Yeah,
like you said.
and we're really forward looking. We have been forward looking all along in the firm. I would say that sometimes we've adopted things before other people have,
Yeah.
including we have a marketplace firm for data, and I think we're one of the first 5 clients. It's not
Okay.
unusual for us to be one of the first 10 clients of the firm. So we feel that it builds good relationships because too you get to know the firm when it's a small size, and as they grow and you grow, you have that camaraderie.
Yeah. That's fantastic, Sandra. Let's focus on the international investing strategy quickly. The firm has a great structure, great foundation, but your international investing, it's been named the PSN Top Gun within the EFI category numerous times over the years. I think it's like over 30 at
Yeah.
least, and we're not even talking about the different categories. So fantastic performance. What is the makeup of the investment management team? Is it, like I said, team environment consisting of the entire firm, that
It's
research
really,
analysts?
yeah, it's really a collaborative effort to think of the client first. I think that's the most important thing.
Okay.
So why are we being paid? We're being paid to benefit our client. And so our major goal is to basically have wealth creation over time and also protection of capital. So those are really our 2 main missions. And everybody at the firm wears that hat on them. And this is extremely important. So once you have that, then it's easy to go down onto the different levels and say, what's the best way to do this? And when
Okay.
we started the international portfolio in 2008, actually was at a suggestion of a fund, a pension fund that one of the people really said, you're good at this. And we had probably since 1989, 10% of our portfolio in ADRs.
Okay.
So therefore, we actually had experience investing internationally since the inception of the firm. And one of the sad parts of when we did start our strategy in 2008, as you know, I think it was December of 2008, wasn't the best timing, perhaps. But I think what we knew from being investors in the US, we had that looking for those companies that were really strong and branded and great companies that you'd actually want to own yourself. And so when we went to look overseas in Europe and Japan, primarily, I think, we wanted to have those kind of companies. And
Okay.
it wasn't where the company was headquartered. Again, it
Okay.
was where the company does business and where are the
Okay.
markets where it does business, which products and services does it sell, who's their competition, what's their management. But beyond that, we start to scroll down into the fundamentals of the company. And this, what really there's 2 things that separate us, I think. We really do look at those fundamentals. And we also do look, secondly, at a valuation metric. And
Okay.
if the company fits everything from a fundamental basis, but the valuation doesn't make sense, we'll pass on it. And I think having that discipline over the years has
Yeah.
really helped us. But having focused on growing quality companies, you have to have that too. I mean, that's very important, the valuation. And I think that we do have macro views on,
Mhm.
but that's more peripheral. That's not a direct decision making on macroeconomic factors.
Yeah, that's fantastic. I love, Sandra, that you guys started on the international with the recommendation of a client that you're really good at this. Take that same strategy, work
Mhm.
overseas, and it works well too. That value tilt at heart is fantastic. Let's talk about
Well, it
somebody
wasn't
you
really
know.
a value tilt. I don't want to, and it may
Yeah,
be a reasonable valuation,
there you go.
not a low valuation, but
But
it's not extreme valuation
yeah,
where the company's stock price is way ahead of its earnings and
yeah.
things like that. So,
That's a great point to add. Thank you. Let's talk about Patrick, somebody you know very well. He's a portfolio manager and founder. Can you tell us a
mhm.
little bit more about Patrick that, you know, you're investing in a small firm, let's know about the person that, founded it.
Surely. Well, and Patrick wears many hats besides being the founder. And the interesting part is that he does have his MBA as well, and undergrad in economics. But what was most interesting, he did pursue the CFA early on before many other people did. So he did get a CFA designation. He held it since 1992,
Oh,
which
okay.
is kind of
Yeah.
remarkable. The other thing, he does have a CPA. So when he first got out of college or graduate school, he actually went ahead and got a CPA designation as well. And so from that mindset, he really has a really great mindset. And I would say the one thing about his business school that he went to, Amos Tuck, is probably the oldest business school in the country. And it wasn't quite like the University of Chicago with its edgy finance department and all that.
Yeah.
It really looked at corporations as a whole, and which were good ones to survive and which ones weren't. And so he really came across as he really believed in what he was doing, and he really wanted to do something good for other people. And so, he did start out with a group of people, of investors, and it was kind of exciting.
Yeah.
And he really does a lot. I mean, I can't imagine, but he does do the portfolio management. He also does, equity research, but, and also, the overall operations of the firm, as far as making sure the bells and whistles and the T's cross. I probably am more the more vision person, the strategic person, so.
Yeah. Fantastic. Good. It sounds like a great team. Speaking of team, and it's a small team, and you mentioned it's reflected in the PSN data that you have a small investment management team. So how do you find good investment opportunities overseas when your team is small and based in the US? What do you rely on?
Well, there is a few databases that
Okay.
give great replacement value from fundamental perspective on individual industries and companies in individual industries, and we use those databases. We also read a lot, lots of papers, journals. You can't name it. We look at competition. We look at certain themes, macro themes that are going on
Okay.
to get ideas, but primarily we will go in the weeds, and we actually are there is so much research out there that's economically provided, that you just have to do that homework. You have to do
Yeah.
that review. And you have to listen to podcasts. We also go to conferences.
Okay.
It's very important to go to conference. One of our associates just spent the weekend at an AI conference to learn what's going on. So, we do everything we can to be as knowledgeable about making decisions, because when we invest for the long term. It's very important. We're not holding a company just for a quick turnaround or a quick cycle. We're really looking to invest in the long term.
Yeah.
And therefore,
Fantastic.
we tend to not like businesses that are too cyclical with too much debt,
Okay.
that may need to be refinanced and have a bunch of changes. And so that's very important us to be selective and feel like we have the best kind of better quality to put in a portfolio.
Yeah. That's great. You've mentioned a lot on this during this conversation, about your kind of overall investment thesis, what you look for in a company, both here in the US, your domestic products, but also overseas. Can you go on a little deeper in your investment philosophy
Of
for
course.
international?
Of course. I mean, as I mentioned, the branded products, the management, sure, all those are
Mm.
important. What's really important, I think, too, though, are the fundamentals. And this would be, not only just the quarterly earnings and what's happening with the company on a short-term basis, but it's also their long-term strategic ideas. And you'll see that eventually through the fundamentals. For example, one of the characteristics we look at is financing yield. And financing yield is
Okay.
basically saying, is this company able to, from their operating cash, are they actually able to reinvest in their company? And that's really important to us because, again, that goes along with growth. We're looking at, obviously good cash flow, low debt, return on equity, the typical characteristics that one would look at. But I think what really distinguishes us is that we are looking for that growth in the numbers. And not just from earnings to earnings or year to year, quarter to quarter, we're looking, what are they actually, how productive are they with their capital, and are they able to reinvest it in the business? And so that's a very important issue to us. And of course, management does play a more important part for some industries than others. For other, I think some companies could go on autopilot, and other ones need a lot of really good, sleek management. So.
Yeah. That's a very good point, Sandra. Very good point. I mentioned we talked about at the beginning that your international strategy has been named the PSN Top Gun well over 30 times. I would have needed a calculator to tally them all up. And so it's been a fantastic ride. What has worked well for the strategy over this time period?
Well, as I mentioned one already, we're looking at where the company does business. So we're looking at their markets. And so headquarters really don't matter that much. Once in a while, of course, they do, but
Yeah.
usually, it really doesn't matter. These are really international companies. And what we like about choosing these companies, these are companies we get excited about because they may be something and no US company reaches. For the Japanese companies, for example, can reach Asia in their products and services and the rest of the developed world, but they have that extra market that necessarily a lot of US companies may not have. The other is, of course, with Europe too, it's like they have very distinguished products and services that can't compete and sometimes with what we have. So we really get interested about that, having that ability to really look at exciting firms that really have growing businesses and great products with great fundamentals. So I hope does that kind of answer
Yeah.
your question. I would say that the other thing that really kind of made us not only uniquely special too is we actually think long term. And I think that sometimes when people invest, they think too short term. So we really want to see, and we're not necessarily ready to jump into a company just because it's a new idea either. You really want to get to know it and feel comfortable with it.
Yeah, that's a great point, especially investing overseas. The ebbs and flows underperform, and I'm just talking about the general overseas EFI underperformance to S&P and just all the noise out there. Thinking long term has got to be so important.
It is, and we don't have that TV going on all day, and all
Okay.
this, so we have that quiet to
Yeah.
be contemplative. Yeah.
Yeah. Remove that noise. Remove that headline noise,
Right.
Sandra. All right. So Um, performance has been great over the long term, but recently, I've done some Zephyr analysis on your international strategy, and it shows recent performance has lagged its peers and benchmarks, particularly the past year. So if a financial advisor is doing research and, doesn't like to perform recent performance, what might you tell them, that financial advisor, that looks past that performance?
Well, I would say that from our perspective, and I think a lot of the people would evaluate the market as this, since post-COVID, there's been a lot of changes. Obviously, we
Yeah.
went through the inflation period, we went through the government largesse because they shut down the economies in the developed market. And I would say in the developed markets probably spent more money and went into debt more than others. But fiscal and monetary policy was very, very kind, and there's a lot of liquidity in the market. And I think what's happened to the market, it has changed substantially in the sense that there are a lot of individual retail investors now in the market, and the proliferation of products in the market is shocking to me in the
Yeah.
last few years. And I think that also macro themes have become extremely important. And so people are doing more theme investing where you'll see all the banks in Europe go up, or you'll see all the something else go down. And you're like, wait a second, this is a little too, how can all the banks in Europe be going up? They
Yeah.
can't all be the same. And so, I think that has been a worry for us, and it's been hard to understand. I don't think we understood underestimated the amount of money that was being put into the system. And so that has been one issue. And then I think the other thing is because we didn't realize that amount of money was still going to be continued to be put into the system, when we all thought perhaps the world, I think 80% of the economists thought the world was going to go in recession in 2022, and it did not. I think we misunderstood. Well, I underestimated again the liquidity that
Yeah.
was there, so that we weren't going to go in recession. And so that's taken time. So we have postured the portfolio somewhat to more defensive posture than perhaps the economy, it didn't turn out that way. So I think that was one of the biggest reasons, is that we were defensive, and also the market has been changing a little bit because of all this liquidity.
Yeah. I think
Chasing.
that's a great explanation, Sandra. And, I often talk whether, in research, those times after it wasn't normal. It was not
Right.
normal. We're kind of getting back to normalization. So you're
Mhm.
exactly right. Like, if you weren't like overweight tech and overweight AI, and like
Well,
you
and
said,
then
it
there
was,
was the AI actually phenomenon happened about the same time we were supposed to go in recession, and we did the fall of 2023, right? And we were
yeah,
like, what's going on with all this AI?
yeah.
Because it's been around for a while, and all of a sudden it was in
It
every
just,
news. And
yeah,
And actually, this is just speaking, and we were talking internationally, but even domestically, I don't know if you know this, but the whole top 10 IT companies in the US are bigger than the whole healthcare
yeah,
sector. Yeah.
you are
So,
exactly right. So,
so it's just been a very unusual market.
yeah, and that's even domestic, but like you said too, AI is, overseas too. So if you are defensive, and most people I think would be defensive coming out of COVID, like you
Mhm.
said, that yield curve was
Well, especially,
predicting
yeah,
a recession. So
I know.
everyone's like, get defensive and
I know you're
don't
trying to
look
protect
good.
portfolios, and yes. So,
Yes.
but I mean, I think we're spending a lot of time, a lot of detail. There's some things you can't do much about. You can't do much about all these day traders, and
Yeah.
the amount of leverage in the system is not normal either. There's a lot of more leverage in the system than there ever used to be. And of course, that's why you're seeing the parabolic moves in the market, where one equity goes up so much and another one goes down. It's somewhat a bit based on leverage.
Yeah. Sandra, fantastic point. So you're exactly right. It's a very different market than when it was just
Right.
not even less than 10 years ago, right? Very
Yes.
different.
Yes. Yeah. I mean, I cannot believe how much the world has changed since COVID.
Yeah, exactly.
Surprising you you thought maybe these were short term, and they're ending up being a little bit longer, right?
Yeah, you're exactly right. Well, I think that's a perfect segue. We talked about, some sectors you mentioned and going from COVID to healthcare. Your largest sector weighting, according to PSN, is healthcare with an allocation of roughly 24%. What is it about the healthcare sector that you like?
Well, aging population, I think there is a lot of new cures out there that are happening to enhance, basic contagious diseases, or long-term diseases like cancer. They're coming up with new therapies that are just amazing. Medical devices, that's in that sector, as well as scientific equipment. And so you really have a broad area to invest in. Normally, we had a lot actually in when we won all the awards in healthcare and technology. And
Yeah.
we really felt that, again, these are strong companies. They usually have very strong balance sheets. They have, they usually have great earnings and expectations. I think what's happened to the healthcare sector, particularly, even this year, is some of the regulation and the fears of tariffs and the
Yeah.
fears of, the whole medical pricing system. And it's complicated this year. It's complicated this year a lot. And so I think that was, it's been hard, but I mean, in general, you do have area of business that people do want. They tend to be more stable companies. The other thing I would say, they've almost become somewhat more competitive and a more unknown unknowns. I mean, you just take the weight loss drugs and the competition with that and the fighting with that. I mean, it's to a new level.
Yeah.
Yeah.
Yeah,
So,
you're
yeah.
you're exactly correct. You just with aging America too, right? And
Right.
healthcare, yeah, and it's very technology driven too. Like you don't think
Right.
of a healthcare company being technology, but they are leveraging AI.
Yes.
Um,
They have to again be
yeah,
on the edge of technology. But I do think that the defensive sectors are still being hurt. The market is really not, there was just something out today. I heard that the cyclicals are again just beating the defensives too, and this is just because healthcare was never like a really strong, what do you call it, defensive. It was, they
yeah.
usually were growing companies. So, but they were a little bit below it too. So I think maybe some of the regulation, all this will be good. There are a lot of IPOs in healthcare,
Mhm.
and so a lot of mergers and acquisitions too. So,
Fantastic. And in addition, the healthcare technology is one of your larger weightings in the portfolio too. So you get some juice there um,
mhm.
in that
Right. And I
portfolio.
mean, you
So,
take, you take the companies though with AI are, excuse me, yeah, related to that. And again, you've had a lot more volatility than, we usually like to see. But again, I think these are a lot of companies trying to be on, the developing the products that will be servicing all these companies, or they're using them. And yeah.
yeah. Yeah. Sandra, fantastic. Let's finish up just talking about separately managed accounts real quick. Obviously, your strategy is an SMA, all your strategies are. Why did Patrick and the firm and yourself decide to offer your investment strategies in that SMA wrapper?
Well, I think, first of all, again, Patrick studied the historical performance of these portfolios, and they, of course, owned individual shares in companies. And I think that direct ownership was really appealing. I also think that we also felt we could customize our clients' portfolios, so we could, whatever their intent was, we can do that. So if there's a certain, they say they want more income or they want to be more aggressive, this is something that we can tilt the portfolio for them to do so. I would say the other thing is that the other benefit is tax efficiency. You can be
Yeah.
very tax efficient with the individual separately managed accounts. They are a lot more work in some ways.
Yeah.
You have to have a good operating systems, and that's what we have spent a lot of time making sure we have. The other thing, with funds, especially passive index funds right now, you do have to worry about what you're investing in. Because
Yes.
the market, if they're market capitalization weighted, if they're just passive index following the index, you have a lot more risk than you might have you had individually separately managed accounts where you're not exposed. Where some of the companies, the market capitalization is higher than their actual contribution in earnings to the index. So those are things that should worry funds. And you, again, you're owning a fund. You're not owning individual holdings in a real company.
Yeah. Mhm. Sandra, that's fantastic. And you talked earlier about forward looking. Your firm is very forward looking. Well, I think we can wrap it all up by saying, you know, SMAs, they were around when the fund was, or, the firm was started in 1989. But now there's a huge popularity, explosion in popularity for SMAs. So it's like you guys saw the benefits. Now it's really trickling down to the retail investors because they want transparency. They want tax optimization. So forward looking, you guys saw it way back then. And now it's really snowballing right now to separately managed accounts.
Right. It's a really, I mean, when you think about an investor, it really eliminates the other thing, it improves communication. Because if you have this individual account, you talk to your clients a lot more than if you it's just to fund your, who do you talk to?
Yeah, yeah, fantastic. Yep, you were exactly right. Sandra, thank you so much for coming on the show and giving us a glimpse
Oh, it's
inside
my
of
welcome. It's my
Martin
welcome.
Martin Investment Management. Really fun conversation, digging deep into your firm, into your investment strategy, philosophy, and the operations. Great job. Where can our audience get more information about Martin Investment Management?
Surely. The probably the easiest one is we have an information account, which is called info at martin-investments with an s.com. And I think that's probably the best way they could reach us.
Fantastic. We will include that in the show notes so everyone can reach out to you and we can put your operations to test with the influx of new accounts and assets.
Well, thank
Sandra,
you. Thank you very much, Ryan. Appreciate the
yes.
time.
Thank you very much. And that is a wrap for this episode of Inside SMAs. Remember, in a world of investment noise, data-driven decisions speak volumes. I'm Ryan Nauman, inviting you to join us next month for more SMA insights that you won't find anywhere else. This has been Inside SMAs, the SMA Data Authority powered by Zephyr PSN. Thank you and have a great rest of your week.